The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we got a USDA WASDE report on Friday. A few changes of note. U.S. average quarter bean yield came down. Changes to the balance sheets, ending stocks, etc. Markets initially moved higher, the grains and oilseeds, and kind of faded, then kind of found their way back to firm, I would say, on Friday to close out the week. Very busy week, of course, with the WASDE, the Fed rate cut, the election on Tuesday. There was a lot of market impacts. We are going to talk about that and recap the week in the trade. Joining us now, very pleased to have him back with us on the show. It's been a few weeks. He has been busy in the field, and in fact, he's still finishing up. He's joining us from his tractor cab here today. Dwayne Bussey with Bolton Marketing in South Dakota. Dwayne, hey, buddy, good to talk with you. Thanks for making some time while you're finishing up that field work today.
Absolutely, yep. Still in the mobile office and with the headset on, but it seems to work okay, and the sun is out. What a gorgeous day up here in Northeast South Dakota.
Yeah. Talk about just real quick how harvest and field work went for you here this season. I mean, from what you've kind of told me, things went pretty smooth, and fingers crossed, getting done a little bit ahead of schedule, or at least typical schedule anyway.
Yeah, no, you get this far north, just getting done, period, is a good thing, honestly. But no, it's probably one of the best falls we've ever had. 2012 was an early one, too. But no, once we got started on soybean harvest, it was a little later start for us, maybe the second week of October, which usually it's October 1st, you're rolling on an average. So it was just a little slow. But like everyone else, we went from being too wet to too dry, and all our beans came off very dry, which I'm sure we'll talk about in the markets here. I think that's why the yield went down. But yeah, soybean yields were disappointing, came off fast, though. Corn yields, kind of through the roof. We were really happy there, and USDA kind of showed that too with the South Dakota number at a record. So yields were great there.
Let's talk about some of that. Let's dive right. 1 soybeans 51.7. I know the corn yield was down about 0.7 bushels per acre. The bean yield down 1.4 bushels per acre after the October report. And it seems like, to your point, the way we ended the growing season, do those moves surprise you? I know they were both below the average estimate slightly, but do those moves surprise you from USDA, Dwayne?
Yeah, they surprised the heck out of me, honestly. Yeah, and I guess they shouldn't have. Everyone was talking about the dry soybeans, right? And if they're down to 8-9%, you're not selling as much water. Therefore, you're not selling as much weight, as many bushels. But I guess I just kind of thought, yeah, okay, that's a farmer telling me that the soybean yield needs to be lower, and I do the same thing too. We always want a bullish story, but no, that did surprise me. So, and I think that's where it came from. I think the crop came off a little too dry. So a 51.7 number is surprising. You know, that's what 121 million bushel reduction in supply, just like that we found today, which I didn't think there was going to be anything. You know, the demand side is still in question, right? I'm one of the guys that says export demand is going to be decreased. USDA did it by 25 million bushels today. Probably more of those cuts coming. I think that's USDA saying that, yes, the strong pace right now is great, but we're going to fall off later on. But man, I got to kind of go back and look at my spreadsheet a little bit more, because that 121 million bushel reduction in supply, that changes things a little bit. But I think the trade reaction, I think Jesse tells you that we still have a big crop. You're still up year over year. World stocks are still burdensome. So we weren't going to go up limit today or anything. And maybe it was the Friday going into a weekend and up against resistance that we couldn't find more buying. So I'm disappointed in the trade reaction. Very happy with the bullish report.
Well, and thinking about soybeans in particular, I know late in the week we got above the 10 handle. Initially, after the election, we got the Trump trade, so to speak, the negative Trump trade, I would say. We were down sharply overnight, came back, and then the rest of the week we broke the 10 handle, got up to 10.30 in Nove Beans Friday, and then to your point, kind of disappointing how we finished, but I know too, thrown in here, the questions about demand, especially moving into next year, but palm oil's been super strong, and that's been supportive here as of late. I guess beans in the 10s, Can we sustain that type of positioning here in the soybean market, Dwayne?
I think we can a little bit. And let's talk about the bean oil then first. I think it was Indonesia overnight talking about moving their biodiesel blend from a B35 to B40. So I'll just tell you how far behind we are, right? So veg oil demand is very strong. And you mentioned the Trump trade, right? That was to sell soybeans. But the counter to that is to buy soybean oil because he said he's going to come in and stop the whole veg oil coming into the U.S. or used cooking oil and getting the tax credit, something that should have been done a long time ago. But that's politics. Let's not get into that. So that's the good trade. Can we sustain this price? I think we can for a little while. And the reason why is kind of odd. Myself included, everyone else you've had on your show, we've all been bearish soybeans, right? And the fundamentals do suggest a lower market. Markets just aren't that easy, Jesse. You and I both know that. Otherwise, we'd be talking from a small island right now. I think the trade right now is the funds actually will buy a little bit of these positions, maybe push us to 1050 or something, kind of on almost a hated rally, and then maybe we sell off eventually again. But yeah, the South America crop coming is going to be a problem eventually. But I think we can hold these prices for right now and see what the money flow election all hammers out to be next week.
How about that corn market? I would say corn has been very firm here as of late. It's just kind of been grinding its way higher, Dwayne. Anything change for you on that corn side post WASDE report and post all of the fun that we've had here this past week?
I like the corn market, I gotta say. The problem is I've kind of hinted at that I'm bearish soybeans this winter, basically. Well, I can't be bullish corn and watch soybeans go opposite directions. That just isn't how this market works. But I am friendly to the corn market by itself in a bubble. I like the close. I like the close above 430 today. Do we have to go straight up to 475? Absolutely not. I do like the way the funds have bought corn post-election. I think you'll see that in the commitment traders reports here this afternoon. But we don't have the bullish situation to go to 475. I would still target. I haven't sold any corn, and I'm holding corn. Maybe sell the stuff on farms, not on farm storage. I'm sorry, in commercial storage. I don't like paying that, but even that you can maybe buy back. I'm targeting like July, which is at 455 today, to get up to that 475. That's where I'd start selling out to next summer. But I like the corn market. Our supplies are getting smaller. They didn't increase export demand, Jesse. I thought that was surprising. Our pace is sky high above USDA. Listen to some people talk while I was in the tractor here today that maybe they did that because they think we're going to fall off as far as demand moving forward. That's disappointing. But man, we're down to what, 1.938 billion bushels for an ending stock. You increase that exports, I think, as much as 150 million. You've got a bullish story for corn, but that doesn't happen until next spring, does it, Jesse? I mean, it doesn't mean that we have to buy corn right now and it takes off, but I like it longer term.
Well, and to your points here, in terms of row crops, just with that risk management in mind, now that we've gotten past a very busy week of headlines and farmers are wrapping up and getting done with field work, I mean, do they start thinking about some risk management or taking advantage of some push bids or things like that here in the final few weeks of the year?
I think they should, and that's just what happens. We get the crop tucked away. Now we can go back to the office and look at our spreadsheet profitability wise. For example, on our farm, we had a nice bid to buy our on-farm stored soybeans this week, and I let them go. So that'll tell you I'm not crazy bullish the soybean market, right? We just had this push, end users thinking the same thing we are, that China may come in and front load and buy some beans from us. So that went out to the rail system, going to be picked up here in December and January. So yeah, go ahead and look at some of those things like that. Remember, basis is key. Commodities broker, of course, I'm going to say you can buy everything back on paper, of course. So I would actually encourage that. But go back, take a look at that stuff. Corn, like I said, I'm 0% sold. We had some hedges on during the year, short the board, got out of them, and I'm willing to hang on to that, especially the on-farm stuff.
Dwayne Bussey with Bolt Marketing is our guest analyst here today on Market Talk as we wrapped up a busy week of trade on Friday and got a WASDE report and more. We haven't touched on wheat yet. Wheat's been, I don't want to say the dog of the grain trade, but it's been kind of quiet, maybe weak here as of late. A lot of world factors at play, of course. I mean, I didn't look too closely at the world wheat picture. I know there was a cut to Argentina's wheat harvest production estimate. Obviously, we got the Black Sea issues. I mean, what's your overall feeling in this wheat market now, post election, WASDE, et cetera?
I hate to say it, but it's been a boring trade this week. We got so much happening in the world: Russia, Ukraine, global exports. Even our exports aren't too bad, but yeah, there was a nothing report for wheat. We had the rains in the southern plains here recently, right? Heavy rains, very good and much needed. We came out with the winter wheat crop ratings at 38% good to excellent. That should improve dramatically over the next couple of weeks. But sorry, I'd have to summarize it. Just kind of a boring trade. It's just not moving. I guess the good thing is we didn't crash after we got those rains, Jesse. I thought we were going to. I thought maybe we had built some weather premium. We're down near support. I don't think we have to break support, but I think wheat's going to be a follower of this corn and soybean market moving forward.
All right, let's go to livestock. Cattle found some pressure in futures on Friday to close the week. I was a little disappointed in the cattle close, triple-digit losses in fats and feeders. Hogs were more mixed. Let's focus in on proteins. Let's start with cattle. I mean, what's your perception now after a Fed rate cut is expected, the election, et cetera? The WASDE report looked to be friendly to beef production in 24, 25. I mean, I don't know. I'm still a little concerned about this cattle trade, Dwayne.
I am too. And it really started with last week's technical trade. The chart started to form a little top at that 190. Cash trade was good, but when the futures market couldn't push through that and the funds were already long about 100,000 contracts, I think the trade and myself and yourself, everyone included, thought, uh-oh, are we in trouble here a little bit? So it was easy for some of the week longs to get out, take their profits, push the market back. And then yesterday afternoon, box beef cutouts down about $6 or $7, if I remember correctly. And that's not a good sign, is it? We've been wondering all along if people already did their holiday purchase buying and contracting, and I'm afraid maybe they did. We got to remember the seasonal tendency, Jesse, too. November is just not a good month for the live cattle market, and I think we're seeing that. We're seeing a pullback. Steer weights. My goodness, last week's steer weights were up 10 pounds just in 1 week. So the carcass weights are still a problem. That's how the Packers are getting through these lower numbers. They're just putting more meat on every animal. So that's getting them through this production hole, you could call it. But you mentioned 2025. I'm still friendly to the market there. I just think we needed a pullback here. Funds are fairly long. I think they need to kind of square up some positions. Let's talk in December again. And I promise I'll be out of the tractor by then because everything gets really hard. But we can talk more about the cattle market then. And I think you'll find me in a friendlier state.
All right, fair enough. Quick note on hogs. That market has been rocketing higher, and traders have been liking the spread trade in hogs, it feels like, here as of late. Pork cutout values Friday midday were up over $7, and it looked like more spreading in hog futures again into the weekend. I'm wondering, though, are hogs getting overbought here, Dwayne?
Yeah, they are, but I mean that chart is bottom left to top right, right? I mean it's one of those charts that I look back and go, at what point, why didn't I buy it at some point in time? But I guess when it was rallying, the cash and cutouts weren't. And this is really a counter seasonal move in hogs. You're not supposed to be going higher into the last quarter of the year, but it has. And now cash and cutouts are trying to catch up to the futures market. So just because cutouts were up $7 today at midday doesn't mean that the futures have to go up. I think the cash and cutouts need to actually catch up to the futures market. The big summary in hogs here is that we just haven't been killing as many hogs as USDA was projecting this time of year. They just don't seem to be out there. Export demand has been very good until this week. It's yearly low here for this week. But up till now, it's been very good. The higher US dollar, the Trump trade is all probably going to affect that a little bit, maybe slow it down.
I should ask as well about energies and the macro markets here this week. Obviously, plenty of fireworks on Wednesday in the stocks post-election of President Trump coming back to the White House as the 47th president. And then we got a Fed rate cut as expected, quarter point on Thursday. You just watch these markets after the midweek fireworks. We kind of just drifted into the weekend in stocks and equities. The dollar's been higher. I guess, how do you sum up this macro market trade here this week, Dwayne, in the grand scheme of things?
Wild, I guess, is probably the easiest term to think. What a crazy week. When you went into the intro and you mentioned what all has happened this week, I'm like, no wonder I'm very happy that we're closing the markets on a Friday right now. It has been a long week. Yeah, the volatility, I think was really obvious when you look at like the stock market. A lot of money left and just went to the sidelines before the election. And I don't know if it mattered big time who got elected. I mean, I think it helps the stock market when Trump gets elected, but we have this big up day, new highs today. I think that's just money coming back in. I don't know if it necessarily means our economy is fixed and we're strong. I think it's just money that was sitting on the sidelines that had to come in. Crude oil has been an interesting trade. I don't think it knows which way it wants to go. We got to remember Trump was talking about drill, baby, drill, right? So meaning more production domestically. Well, that should put more pressure on our crude oil market, but we're holding above 70 right now, but that's still down $2 on the day. Look for that to be very range bound moving forward.
Well, and I know that was kind of a loaded question on what's been happening with macros here, but you make a good point. A lot of money on the sidelines. I'm just thinking out loud here, but could some of those fund traders and some of that managed money once again find some value in commodities here moving forward? Or could they be concerned about potential tariffs and that whole talk that's been out there, Dwayne?
I think a little bit of both. I'm really glad you asked that because I think it can loop us back to soybeans and why I'm so bearish and I talk so bearish about the fundamentals, but yet I think soybeans are going to rally in the short term. I think there's that money on the sidelines. They're actually short the market right now, the managed funds. They're rarely short soybeans. I think they could buy for a little while here, and they have enough power that they can push it, 50 cents to $1 when all of us are saying it shouldn't happen. And I guess to summarize, I'd tell farmers, take advantage of that. Like I said, I sold a big chunk of my soybeans. If we get to 1050, I'll sell the rest of it and be done with it because that South America crop is coming. Remember, our world stocks were still, even though they were decreased just a little bit today, they're still 20 million metric ton above the previous record. And that's before Brazil's new crop and Argentina's new crop that's coming. That's projected to be 20 million higher than last year. So we've got a supply problem coming in soybeans. I hate to say it, but we probably need a drought here to really rally the soybean market next year. But that's a long ways off.
Absolutely. I think to that point, it just echoes that we're entering that time period of the year where U.S. markets, enter the holiday season, get quiet, and South American weather really kind of takes hold of the markets here, right, Dwayne?
Oh, absolutely. It used to be the weather market was just us during the summer. Now there's about a 10-day pause between the end of our weather market and when South America starts. And now I'm watching South America weather maps when I get up in the morning and maybe don't know every region like I should, my geography, but that's exactly what we're going to do moving forward.
Absolutely. Dwayne, good stuff as always. As we close it out, if folks want to reach out to you and talk about their marketing plan and more, give you a call while you're in the tractor here the next few days. I know there's multiple ways to reach you, phone, online, etc. How can folks get in touch, Dwayne?
Yeah, they can call us here, 605-448-2365, or they can check us out online at boltmarketingllc.com.
Dwayne Bussey with Bolt Marketing. Always appreciate the time. It's good to catch up with you again. Here's to a safe finish to field work for you, and we'll talk to you in a couple of weeks. Thanks for joining us.
Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.